In this chart reading masterclass, I will help you understand how to read, anticipate, and trade price action charts the right way. We're going to use some classical concepts such as trend lines, support and resistance. We're going to take a look at yesterday's highs and lows. I have also included a round number indicator, pivot points for daily, pivot points for weekly levels, a supply and demand indicator, moving averages on a multi-time frame approach as well, and some other really interesting concepts. So let's get into the charts and let's start our masterclass. So when I start a price analysis, we have to first assess the overall situation, and then we can take a deeper, closer look at the lower time frame. So if we want to trade the 1 hour, it may be okay to go to the 4 hour, and let's see what we have. So zooming out a little bit, okay, we can see that definitely something is happening in this area. Here, okay, you can see this falls into the same area, so definitely this seems to be a level we have to keep an eye on. And interestingly enough, it's also the round number. So we have 140, we can make it more precise. So 140 is the round number. So the market seems to be paying a lot of attention to this. Another thing that we have to notice is the change in the high-low structure. Whereas previously the market made higher highs, we are now making lower highs. So this is pointing towards a shift from bearish to bullish market. Another thing that in this context I like to observe is the pivot point structure. So I'm using the weekly pivot point. If you go to indicator and you type in pivot, this is the one that I'm using, pivot point standard. And then I will just set it to weekly. You can see here pivot point time frame, weekly, and then I just use the central. I disabled everything else. We can make it maybe a little bit bigger so it stands out. And what we see here is very common in a trend change environment. Whereas previously the market was break and retesting and trading above the weekly pivot point and using it as support. Here now the market was more ranging and the pivot point then falls in the middle, and the market doesn't really care about the moving about the pivot point. However, something has dramatically changed here in this pivot point, because now the market is using this pivot point as resistance. It tried to push through it 1, 2, 3 times. Each time it was rejected, and then the final time the market really sold off strongly from it. So this is giving me the indication that we are really looking at a potential start of a downtrend. So from now on I would be expecting more downward pressure. We can also, what I like to see is the higher time frame moving average. So I'm using here the moving average SMA, and you can set it the time frame to daily, 1 day, and 50 period is a good one. So let's turn it on, and we can see that the market is, whereas previously it has been trading above it. Here was more of a range, then we have trading above it again. Now is a very important thing has happened, and the market is breaking below this moving average. One thing that we could look for is a retest of the daily pivot, of the daily moving average. And this is a big cluster. You can see the daily moving average is also falling together with the 140 round number. Another thing that I noticed when scrolling out is that here's a key level. Here you can see this is the turning point that led this trend that started in November and then lasted for 3 or 4 months, and then there was the end. So clearly there seems to be something very important in this level, and we need to have this on the chart. And you can see when we extend it forward, this is also where currently our highest high point was. So this is the highest high that we have seen, and after that the market changed the high structure and we have lower highs. So everything is pointing towards short and gives us the idea of we should look for a bearish opportunity. We could go to a lower time frame, maybe 1 hour, maybe 30 minutes. And here what we could do is, first of all, we don't need this. Oops, that's the RSI. We can maybe consult it later. What we can do is turn on the weekly pivot. It is here. Then we could turn on the daily pivot, which is here. So it's the same thing, but it's the same indicator, but pivot point is set to daily. And then you get a new pivot point every single day. So one idea would be maybe to look for a short off of this. That would make a lot of sense. We want to be short. Definitely the market is really screaming short here. Everything is pointing towards a short bias. What else could we use? We could use, for example, the Bollinger Band. I'm not sure we need that. So I think we have quite a lot of stuff here. It's also previous support level that may be turning into resistance. So a lot of clusters are coming together here. Let's see what is happening. So I definitely would like to be short. We don't have a pattern yet, so you can see the market seems to be having a relief pattern. What is happening is that we have a strong bearish move, and you don't necessarily want to go short right here because the market has moved, and the longer such a move goes on, the longer the market moves to the downside, the higher the likelihood is you're going to see at least a retracement. And the market always moves in those waves, right? We've seen those many, many times. So we want to catch a trend wave. We want to catch the wave that goes to the downside. And we want to avoid trading into those retracements. So it seems like we are maybe here currently at the end of wave 1. We should be waiting for wave 2 to complete. And then we could look for trading wave 3 and then wave 5 and so on and so forth. So that would be maybe a pretty good idea. But we don't have much yet. Another thing that we could wait for is just wait for the market to make a lower low, and so that we have this structure here complete, and then we could think about shorting. Let's see. We're just gonna move candle by candle and see what we're gonna get. It seems like we have a short-term structure here, maybe something like that, maybe a flag. Flags are very important patterns. You can see if we extend the daily moving average forward, this is where we are. So we are really nicely retesting the daily 50 period moving average. And we are breaking out of the flag. We haven't broken the low yet. So in this case, I would wait. There's no urgency here. We could wait for the market to break into a new low. We retested and rejected the 140, which is here. Keep that in mind. You can see we are rejecting the lows for now. Moving higher. Confirming this level, which is good. Now we have more information that the market does care about this level, and this is actually a valid support level. Why is it good? Because now we know that if the market breaks out here, then we are looking at a very meaningful signal, because this level has held twice now. And if we can get through this, that's a bearish signal, which is happening here. You can, and this is very common, you will see that quite often. When there is a lot of pressure building up, when the market is trading sideways, we already have the bias and the knowledge that everything is screaming short, but you still need to wait for the trigger, and you just cannot jump on a trade without having any confluence and confirmation. So now it seems like we have fulfilled this wave cycle, very short wave 2, and now potentially early wave 3. Let's see what this brings. We're gonna get soon a new daily pivot point, but in this case here is basically where you would like to go short. So here at the open of this candle, if you want to go short, you have options obviously for stops somewhere around here. You definitely want to put your stop somewhere in the range for more protection. You don't want to have your stop loss underneath this area, because I wouldn't say it wouldn't surprise me to see a break and retest out of this structure. So that's something to keep in mind. See, market is pulling back. Not a full retest, but it's moving higher. So that's why I always would recommend put your stop loss in the range. See, we're making 2 runs. Now the pivot point, the daily pivot point, has moved lower. So you can see the pivot is adjusting, but nothing has changed really from our initial price analysis. We are running at a daily pivot. It's holding, which is really, really great. So that could give you a lot of confidence if your pivot point is holding. Especially you can see here's where the pivot point started. So we are still very early on in that day. We still have probably 2/3 of the day here left. So early on in our trading day, the market tried to reject or try to test the pivot. It held and is moving lower for now. And you can see we're breaking through lows and moving lower. So yeah, very nice Confluence. Always zoom out every now and then to see where are we. Okay, we're getting close actually to here. This is a very important turning point. So here, this is the origin of this big uptrend. It's the 138 round number, and yeah, this market did like, or does like, its round numbers. The 139 is coincidentally here, where we have the flip, support turning into resistance. So if you are still short, you definitely want to consider taking profits very close to here. Probably you can see we're getting close to the end of the trading day, and since this is also, here's our weekly pivot, and we're coming close to the end of the weekly pivot, it means that obviously we are ending the week, so the week is almost over, and we are entering late Friday trading, and late Friday is usually not super active, except for if we have maybe NFP or something else. And you can see we are end of the week, we are running into the support, so we potentially were able to catch this leg here to the downside. But yeah, Friday, you definitely want to consider being flat, especially, you don't have to really hold this trade over the weekend. You already made quite a bit of profits. And in this example, I would always recommend to my students to just take the win, close the trade, enjoy your weekend. You don't have to worry and sweat what may happen over the weekend. And then Monday morning, worst case, the market gaps up, you have given back a lot of potential profits and unrealized profits, and then your Monday is already starting on the wrong foot, and that's not a good way to start. So yeah, just for ease of mind, take the profits when it makes sense, enjoy your weekend being flat, and come back Monday morning with a fresh set of eyes and mind. So now you can see everything has reset. Weekly pivot is moved lower quite a bit. We are still well below the 50 on the daily. Where's our 50 from the 30-minute? It's here. You can see very nice confluence. The market is trading along. No violation of the moving average yet. We probably also, let's get rid of this, have a kind of a trend line, maybe a channel. Kind of a channel. It's a little bit widening. By the way, if you want to copy paste it and to create a parallel channel, you just select one of the trend lines, then you press Ctrl and Z, and then Ctrl and V, and you have a parallel trend line. And then you can see this is not parallel, so this would be parallel, but we are breaking here this. So it's not a parallel channel, it's a widening channel, which is okay, doesn't matter too much. Keep in mind, where are we, bigger picture? Here is a level that we were being aware of. Here's another even bigger one. So you can see, not a round number this time, but clearly a very, very key level that we need to be aware of. What are we going to do now? Monday morning, we're starting the week. The market has moved lower quite a bit. I wouldn't be too thrilled to look for shorts just yet. As I said, the longer such a bearish phase goes on, the higher the likelihood that eventually there comes a retracement, especially if we have fulfilled the Elliott wave cycle, which is 1, 3, 5. And Elliott wave suggests that after wave 5, there's a likelihood for at least a longer wave against the previous downtrend. So you can see we have probably been trading more than 5 waves. Wave 1, 2, 3, 4, 5, 6. So yeah, we are definitely above the Elliott wave count. Obviously, this is more of an art than a science, and sometimes it's a little bit questionable what does count as a retracement and what do you count as a trend wave, but that's the way it is. So definitely I would be a little bit cautious trading shorts at the moment. What I would like to do is maybe see the market rally, maybe retest our pivot point, and then think about shorting again. So that seems to be a little bit more in line. Let's wait for the market to move higher and then consider taking a continuation. So we know there's a channel, so I can get rid of this, right? So what I see now, this really jumps at you. You have this pattern here, triple bottom, double top, a breakout. I wouldn't be surprised the breakout to hit at least the pivot. So if you see that, what you could do is go to the 5-minute time frame and then just trade the breakout out of this to the pivot point. You can see I'm not really fully there yet. So you can see this is the relief pattern. I wasn't able to jump to the lower time frame because obviously I'm using TradingView and they only give you so much of historical data. And if you go to the 5 minute, then this will break because you cannot stay in the replay mode. But you can see worked out quite nicely. So what is the next thing we could do here is we could wait for the market to give us some type of sign that this bullish trend wave is over. Right now, obviously, we don't want to be short because the market is just pushing higher, but also we probably don't want to be long because we are still in the overall downtrend. Here's our daily 50, so we are trading below it. And it looks very, very bearish right now, right? So it wouldn't make too much sense to be long after hitting the pivot. So let's see, do we get some exhaustion around here? Maybe a pattern, something. By the way, here's the 139 round number, good Confluence. This market loves its round numbers. So here we are seeing early signs that the market is losing momentum. So whereas previously the market was easily able to push higher, we are now seeing this rounding. The market had this double top. So that's a very good sign. The market is also trading above the pivot, but not really convincingly. So if you would bet on more bullishness, what you would like to see is a break and a retest of the pivot. However, since we are more on still in the short oriented mindset, I would love to see the market break below the pivot, which would then indicate the failed pivot point retest. So if the market cannot stay above the pivot, it means short. And you can see this is what is happening here. Let's just get rid of the daily for now. So what do we have here? Let's just see. Maybe we can turn on the 50. We're still well above the 50 of this time frame. We don't, do we? Do we have a trend line? Those deep trend lines are not super amazing. So in this case, what you could do is wait for a break and retest, maybe of this one or maybe of the pivot point. So let's see, maybe we get something. It's already looking very, very tempting to go short here, right? So if you're an aggressive trader, you could think about pivot point breakout short. Otherwise, this is also a good level, or just the break and retest of the pivot. Okay, we're seeing a little bit of a push. Do we get the retest of this area? The bearishness is coming back sooner, before. All right, so really nice short signal now. You can see we're trading here below the last low, and it seems like on a microstructure, we had here higher highs all the way up, and now we have a lower high here. We also have higher lows here, and now you can see from here to here we have lower lows, and with this breakout we are confirming that we have a lower low once again. So everything is showing us this microstructure of the market rolling over. So if you're not short based on the pivot point breakout, this could be another indication. We could also probably draw a fib and see, do we have Confluence? What would you like to see in a fib? So here's your point A in a fib, point B, and then here's probably point C. And then you could use point D as your potential target. Fibonacci extensions are very common. Fibonacci, so what you do is just drag it from the high to the low. And you can see we get the 200 here. You could also turn on the 261, which is a very common one, especially in long and strong trending markets. So this could be our potential target. You can see we have a perfect 50 retracement. So we don't need to keep the fib. We just can remember this is the 261. Which is a good target in big trending markets, and it would make sense in the chart context because here is a accumulation. This is called a accumulation. If you know my videos, accumulation and distribution, they are at the origins of trending markets, and what often happens is that if the market moves back inside such a zone, you can often see a reaction here. So it won't make sense to get out at least before we hit this area. So potential short again. Stop loss, you could put it above the highs, then it's a little bit safer. You definitely have space, you don't need to have a very tight stop. You can see we're getting the retest here, but nowhere close to the highs, and it seems like the market is unfolding. Let's see where's the 50 on that move, on that. Yeah, you can see very nice confluence. Now with this breakout here, we are below the moving average. It's common to see retest, especially now you can see what do we have here. It's the weekly pivot, the red line, the 50 period moving average, and also it's the flip here, the flip zone, support turning into retest, resistance. So it's common to see here a retest area. So if you miss all of that, here could be another entry point. And then you just keep following the price action, create your trading plans. You can see it's nicely reacting to this level and moving lower. So yeah, that's it. I think this is a good way to stop this. We are looking now at a potential inverse head and shoulder, shoulder, head, and shoulder. So sorry. And yeah, so you can keep this going for a while. I really love to do this on my own as well. I've been doing probably hundreds or thousands of hours of those chart reading exercises using different tools, and then just keep learning and studying what is happening, keep track of what you're actually seeing on the charts, what is happening, how's the market reacting to those tools. And I hope you got something out of it. If you did, leave a like and leave a comment, and I look forward to hearing from you.